Right, guys, welcome to day 24 already of Anomaly sequence. I'm very happy to be here. I'm excited to showcase you guys underrated concept and give you guys a little bit more of an understanding before we go over a couple of trades that I took in week 2 of the TradeFlow competition. I want you guys to understand these technical terms first, just introduce them to you guys before we go in depth on them. And today we're going to be talking about the balanced price range, BPR in short. This is a concept that many people use wrong. Reason for that being is they treat it as a technical array as something that you can it's more systematic as to where you can use these and how you should use these, right? Unlike just an order block and an imbalance, which is going to be bullish or bearish, these BPRs, these arrays in that sense, have more, let's say, variables that you need to take into account. So overall, let's first kind of begin with the underlying concept of what is a BPR, right? It's when we have an up move followed by a down move, and in that let's say move upwards we have an imbalance, and in that move downwards, let's say, we have an imbalance as well, and then the overlap between these two becomes your BPR, right? So the theory suggests that we have, let's say, an inefficiency to the upside, entailing, we're all familiar with imbalances. We've debunked imbalances as to why we shouldn't call them FVGs. For the subtle reminder, FVG stands for fair value gap. Fair value entails and implies that in that gap there will be fair valuation of price, which is automatically actually debunked by the theory of a BPR, right? Because it hasn't found fair valuation in that gap and has actually created an inefficiency to the downside. So automatically kind of debunks the whole concept of an FVG. Look, again, I'm not here to create a meta or anything and suggest what is right, what is wrong, but theoretically I like to keep things neutral in that sense. Therefore, I like to use the term imbalances and inefficiencies in liquidity voids rather than suggesting fair value gaps, right? Because fair valuation is a terminology that is so broad, especially when you start implementing order books and you start implementing future data on, let's say, your Forex pair from CME and all that good stuff. It just becomes very messy. But again, we'll get there. Don't worry about it. A BPR suggests that in that gap to, let's say, the upside, right, and to the downside, in that inefficiency, we have an area where price is overlapped on both ends, suggesting that that is an area where price is balanced, right? Because actually, it's like the mathematical rule that two negatives cancel each other out. We have that here, although it's not as simple as that. It doesn't just mean that that is a magic area where price will react to, but often enough it is something that price will gravitate towards if it hasn't already broken away from it. A BPR suggests, and in theoretical terms, it entails that there was an inefficiency of buy-side pressure here, right? That people couldn't place their orders in that move upwards, and then also in, let's say, that retest and then that retracement, and then potentially, if we're breaking an origin point, becomes a reversal, we also know that there's an overlap with an inefficiency to the downside, right? You can already see kind of from this example when in this use case it is relevant, right? Here in these ends, you can see that the BPR is going to be above that midpoint, above that proximal of that imbalance, right? In these cases, it's not something, and this is why it's so difficult. So let's just say I wasn't planning to talk about this example whatsoever today, but it's here now. So in this case, right, we have, let's say we take some sort of BSL right here, and then we can see that price kind of formulates your E1 right here, sweeping buy side liquidity, sweeping liquidity, all that good stuff. And then this would be some sort of continuation play in E2. This is why BPRs are so difficult to do in E2s. Very, very difficult, because often enough price in a correct liquidity isolation continuation play will just tap the proximal line, if not the midpoint, and doesn't really often come for that BPR, right? Whereas this example right here, kind of one of the ones that I want to talk about, especially with your E1s, BPRs become crucial when it comes to fine-tuning your entries, when it comes to really being a little bit more precise, and it allows you to close the gap between, let's say, ideology and execution if there is an abundance of arrays, which is a luxury problem to have, which doesn't happen often enough. But what I want to point out is what it comes down to, and what BPRs are known for, are an area where price could come back to distribute, right? 9 out of 10 times you will use BPRs in just an individual area where price will distribute into. And it's the same concept that we use in AO and with Exodus, where we talk about open pockets. Open pockets are imbalances left behind, higher or lower current price, and usually external liquidity, usually not in the current dealing range, because that is where price, it acts as a pocket, and it acts as an area where price can go into to distribute that final, let's say, volume that is in that bullish or bearish leg. BPRs act very much the same. BPRs are actually like a refinement of, hey, there was two inefficiencies overlapping with each other, and in between those two inefficiencies you now have a pocket that price will most likely eventually distribute into, above or below current dealing range. So let's talk about what that means, right? Stuff like this. This is your most common concept of BPRs. Usually happens on, let's say, H4, H1, and the daily. Daily is the most important aspect, right? We have some sort of move here, and then what we notice is that price leaves behind, let's say, taking out some sort of resting buy side liquidity here. Price leaves behind, it's the same concept here, but this one's just a little bit different. So leaving behind a BPR here. And then currently we're in like this range. This is kind of what you see on DXY, and this is exactly why I want to showcase this first, because lots of my trades last week on the TradeFlow competition were based off of having a BPR as your main draw on liquidity. And this is so important because you will see stuff like this where your imbalance is like here. We've already like used the imbalance, we've touched the imbalance here. You've got your like higher fractal, pretty much E1, which you don't really use E1s on daily time frame or anything, but you get the concept. You create a shift point, we take buy side liquidity out in this case, and then we go lower, we've taken and swept this level, and then we're coming back, and then boom, you have a very clear draw on liquidity, being that BPR. And normally you wouldn't look at that if you were just looking at imbalances, and you'd be like, oh, but the imbalance is already taken. You might go for midpoint, but that BPR really acts as like, that is a refinement, a fine tune of where price could distribute into. This is the best case of BPR usage. The easiest way of using BPR is spotting them on higher time frames, annotating them, and understanding that they aren't automatically your draw on liquidity, but if they come in conjunction with, let's say, an isolation like what we see here. So here obviously we have price taking out two levels of sell side liquidity. So in this case, if this was EU, that would be deemed where price is considered cheap. Let's say we have some sort of imbalance here that fails to follow through, price goes lower, and then it's like, hey, this is still isolated, strong rollover, and we want price to go to the upside. We have this BPR right here that will act as your target, right? It's just a way to make sure that price will revisit these areas if everything else is in conjunction, and it allows you to really get a really precise area for you to like target a bullseye, right? It's like you've got your arrow, you're aiming, and you're like, boom, that is where you want price to go to. The other one, which is kind of very similar, is right when you have a BPR being left behind after we take a level like this. So kind of the same argument that we have here. We have something along these lines, but price is in an array, right? And we don't talk about this often enough, because this is kind of the trickiest scenario. Just like when we have our like 3 playbook that we talk about, from playing highs and lows into arrays, right? So sweeping liquidity into arrays, then arrays into, let's say, sweeping liquidity here. So if you were to play from this array into this array, that would be a play. And then we obviously have levels into levels, right? So buy sell liquidity into sell sell liquidity, which is the worst concept, play in that playbook. And then here, this is kind of where people get confused. They don't add, let's say, factors to their arrays. In this case, this would be, array into array. When we have stuff like this and we take buy sell liquidity out and we're in, let's say, a current imbalance or an order block, we're in one of our main 2 arrays and there's a BPR higher, it's one of those things where you want to see how price trades away from this BPR, right? And only then when we take out, let's say, an opposing array like this, and we induce it, we're going to be looking into trading back into that BPR, right? And this is a tricky one. So it's because look, right, what you're doing is that there's no reason for this BPR to act as a pocket yet, right? Here, there's a reason for that BPR to act as a pocket because it's outside the current range, but this is in the current range, right? So you need to, let's say, figure something out where price has actually finished this leg, right? And this bearish leg to the downside has potentially then been finished after price has induced this bullish imbalance, right? This being a bullish imbalance because many would want to trade this and then go into that BPR. But what you then do is you wait for, let's say, something to be taken out, an opposing array to be taken out. And from there, what you can then do after this inducement of this bullish array, because this is still in the current dealing range, right? And this one isn't, right? You can still mark this range out, but your current dealing range here is this one, right? This small one. And we can label that X and we can label this Y, right? Because you're not focused on Y just yet, you're focused on X because this one is the one that took out, let's say, this low, broke this high here, isolating this low right here and taking out liquidity there. Whereas here, you're very much, you've taken liquidity out here, you've got one break to the downside, and you don't have that confirmation yet of a dealing range. So this BPR that is above this buy side liquidity here is still very much in the current dealing range, but you can't have that as some sort of reversal point. Many people, like I said, will then try to, because there's a BPR, they'll be like, oh my God, this BPR is the area that we can target, right? And then they'll go into that way too early, right? So wait, that's the example with this one. You want to wait for price to induce an opposing array, and then you will be trading pretty much the 4th play in the playbook, which is, let's say, just trading into arrays after opposing arrays have been taken out. You see, that is the only way how it makes a little bit more sense, because just like what we're doing with highs and lows, where you wait for price to run liquidity, we're running liquidity here as well. Instead of it being a high and low that's taken out, we're inducing an imbalance or an order block, and then we wait for a reaction, just like that, just like how you're doing with previous daily low, previous daily high, all that good stuff, previous weekly low. Any of these levels can be taken out, boom. In this case, you want the full imbalance to be taken out, body close here, and then from there you are waiting for price to reverse, kick in with new intent potentially, but either way, then you can target that BPR. Okay, now then the last way that we use BPRs is in your entry model, in E1s, right? So imagine you have sell liquidity here, sell liquidity here, and pretty much you have your shift here to the upside. What you're then looking for is pretty much you've got this imbalance to the downside, and obviously you've got this imbalance to the upside. and then like that, boom, voila, you have your BPR, right? Then, because you got so many things going on, and you're probably like slapping an OT on this, and you're like, oh, where do I begin? This is where BPRs become super nice, right? This is where you're like, oh, let's just say for this example, the OT doesn't line up for whatever reason, right? The OT is lower, body of this candle goes here, and you're like, oh, I don't really know where to enter. This is where you can use BPRs in your entry model, right? This is where you could use BPRs as some sort of area that you can refine your entry, right? And then that you can refine your entry, and that you can then get a very precise area for your E1. This only works with your entry models, and this is where you are able to go offbeat. You're able to go into, you can see that I've got these time frames here, M7, M12, M8, just to find a BPR, but only if you have everything, right? You can't just have a BPR and be like, okay, hey, I'm missing an order block, I'm missing a sweep, I'm like body close. Like, the sketchier it is to then take a BPR, that's just looking for excuses, right? If you find yourself chasing a BPR in your execution model because there's nothing else, you're most likely wrong. You want to be at an area where you can get a BPR because there's an abundance of arrays, right? Now let's talk about the last example when it comes to pretty much BPRs, and that's kind of where people fail, like a lot. They will find something like this, right? And and this is what I see too often. People like think BPRs are the holy grail, and then they'll find like on H4, H1 in the current dealing range, you will find stuff like this, right? Or you're stuck in your current dealing range, and we had that last week, right, when price was clearly bearish. People wanted an H1, H4 BPR, something along those lines. I'm not 100% sure just yet, but either way, stuff like this, waiting for this BPR, that's kind of where we will go into the fact that, hey, don't do these things, right? Not yet. Stick to just what I said here for the time being. From there, you want to make sure that you understand that waiting for BPRs here isn't just the thing to do just yet. We'll go over that in, let's say, an in-depth concept of BPRs, but I just wanted to showcase you guys these because then I can explain my TradeFlow trades one more time. So I'll see you guys in those.